Hi everyone, my name is Piterpakulski. Today we have finally a final overview of our Uber Lyft taxi business idea. Today I would like to show you what usually future business owners want to dive into when they build financial model. What inputs they would like to play with when the model is ready, what parameters affect their future business idea. So I hope you will enjoy this video. You may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video I'll give you the link to the playlist where I will be keeping all these tutorials, and in the description of this video I will give you all the links on all the list of tutorials how I created this model from complete scratch, so you may watch one by one from scratch absolutely free. So what is the logic of our model? So first of all, let's go to the tabs, and I will show you what tabs it consists of. So the first tab is the tab where all the data comes from this, and this tab. So this is some kind of consolidation tab. Here we are calculating internal rate of return, we are setting up discount rate, we are setting up the iteration of discount rate, and calculating the internal rate of return. Here from 1 to 5, these are the models for our cars. So let's assume that we have 5 cars in our fleet. And here we have a tab for sensitivity analysis, and let's walk through all these tabs. So first of all, we have a rule that all our inputs are colored with blue. Other cells are formulas, so we're not touching all these cells. We are working only with blue cells, this one. And when you build financial model, it is vital for you to create a rule for inputs because it is very easy to work with model if all inputs are marked. You can easily find the data, the inputs through the whole financial model, and you will be able to create scenarios very quickly. So let's start with the first tab. So here we can see the financial efficiency of the car, and we have our 5 cars, and we have simple and discounted payback period diagram for these 5 cars. We can set up when we start operating activity for each car and what type of financing we are using for this or that car specifically. These are the coefficients for revenues or expenses to play with. So we can play with these global coefficients, these global inputs, these global coefficients, and see what will be the financial efficiency of this selected scenario. So we are going from global numbers to local numbers. So first of all, for example, we can switch off, for example, this or that car from calculation, and we can see what will happen with the simple discounted payback period diagram, what will happen with financial efficiency of our business idea. So we can quickly create this scenario. Also, for example, we can displace our cars, for example, in timelines. We can, for example, say that the car number 2 we can displace to 2028. We can displace, for example, this car to 2023, for example. So we can quickly displace a huge amount of data. Then, for example, we can quickly increase the revenues for our model. For example, if we want to increase the revenues on 20%, we can do it here. Or, for example, if we would like to take only 70% of current revenues, we can do it here and see what will happen. Then, for example, we can increase the amount of trips. And according to our system of limits, we can see that this is unrealistic numbers, and we need to decrease this amount of decrease this coefficient, so it is still unrealistic. Let's go to 120. So that's okay. And this way we can create a huge amount of scenarios and see how our business idea will act in this way, in that way, and we can very quickly see how stable our business idea is. Then, for example, if we see that our business idea generally looks okay, we can, for example, go to this or that car specifically, and here we can specify the amount of the names of trips, the types of trips, their mileage, their duration, their revenue. We can switch on and off different trips from calculations. So, for example, if we see that we can go back. If we see that some trips look very optimistic, we can switch them off from calculations. And here we can see how our business idea will behave if we switch off some types of trips from calculations. Or, for example, what we can do without switching off these types of trips from calculations completely, we can just take 50% of their revenues, for example, for specific trips. So we can do it like this. So this system of coefficients allows us to see what will happen with our business idea on the macro level and micro level. So, for example, we can decrease the revenues and take, for example, 40% of revenues from the car number 1. This system of coefficients will help us to understand how our business idea breathes better. Then, for example, we can play with Monday activity, amount of trips. So, for example, we can
the amount of trips coefficient added to this amount of trips. We can switch on and off different types of trips from calculations for Monday, Tuesday, Wednesday.
And what we can do, for example, we can for example, assume that the car will be working, for example, from Monday to Friday. So we will exclude Saturday and Sunday from calculations. We can go to car number 2. So now you can see how fast we can create different scenarios. Let's put back So what is important, we can increase or decrease the amount of trips for this or that specific day of the week. So for example, we can say that on Monday we will have just 50% of what we planned, and we will be able to see how this will affect the financial efficiency of our business idea. If we take 50% of basic amount of trips for Monday, so we will be able to see how Monday, Tuesday, Wednesday affects the financial efficiency. So here we can also set up the limits for the daily mileage of the car. So for example, we can assume that the car won't be riding more than, let's say, 400 miles a day, and the car won't be working more than let's say 9 hours per day. So this will mean that we will have to decrease the amount of trips because our limits are exceeded. So that's why let's, for example, take 70% of the current amount of services, 70, then 75, 80, 90, no, let's say 88. So this means that the system of limits help us to live in the world of realistic numbers, in the world of realistic mileage, realistic duration the amount of hours of the car being online. So this helps us to set up the realistic inputs and see the realistic simple values of simple discounted payback period. So that the system of limits allow us to help us to narrow the amount of scenarios that we can look at, but these scenarios will be real. So what is next? Then we can set up, for example, the speed of reaching the target revenues. This is very important because when we, for example, when we get online, it will maybe take us a month or 2 months to get the target revenues, and during this period we may have some operating losses. And if we go to the cash flow statement, we will be able to see that we have some period of losses during, for example, the first 1, 2, so this is the operating activity, and during the first 1, 2, 3, 4, 5, 6, 7 months of operating activity, we do have some operating losses. And all these operating losses are we can see these losses because of help of this block of inputs. And if you when entrepreneurs start playing with these percentages, they are able to see more accurately the amount of financing they will need additionally to the investments, fundamental investments. They can see more clearly the additional amount of these losses they will need to start the business. So these operating losses are very important part of financing needed for the business start. And playing with these numbers will allow you to see how much additional financing you will need in this case, in that case. So this is very, very important part. Then we set up when we are selling an old car, with what mileage on the odometer, what is the price of new car, what is the price of old car with this mileage on the odometer, what is the down payment for the lease, what is the interest rate, what is the long-term lease term, what are the costs of dealership maintenance. So here we can specify the mileage on the odometer. This will be the costs of dealership maintenance. This is the month of operating activity, and these are the costs for parts during this life cycle of the car. Then we are moving to investment plan. So here we specify what we are investing in, how much we are investing in, and when we are investing in. Then we are moving to the seasonal fixed costs. We can, for example, switch them on and off from calculations here. We can add global and local coefficients to make us be able to see what will be the simple discounted payback period with or without fixed cost item. We are moving to the gasoline expenses, Uber and Lyft commissions, specification, and drivers payroll for those drivers who work on this car. And then all this data is coming to this tab, and all this stuff is flowing into the cash flow. Here it is. So we also have a management company. We can switch it on and off. We have a payroll for management company. We have a management company fixed costs. We have management company investment plan. Then we can specify a loan. For the general loan for the business, it can be linked to the management company, or it can be absolutely independent, live independently. So here we specify the amount of loan, interest rate, term of loan, grace period for principal payments, interest payments, and when we get this loan, if it lives a separate life. Then we specify the tax rates, and then looking at the cash flow statement, we're able to see how much money we need from our pocket, how much money we need using our loan. And here we can see the cash balance at the end of the period when the project starts generating its own cash, and what is the amount of cash generated by the project by this or that amount of time in future. So we can see, so at June 2029, at the end of this month, the project will generate $4.3 million. And we can look at the timeline of the project and see what are the revenues, what are the operating profits, what is the burden, principal payments, interest payments, and so on. And then we can go back to our dashboard. We can see all the financials here, and we can also see monthly for this or that scenario, what are the revenues, what are the total costs, what is the profit, what is the level of profitability for this scenario. So here we can play globally with inputs. And also we can play local with inputs. So we can go to this or that car and adjust the inputs for this or that car specifically. And look here what will happen with simple discounted payback period diagram and what will be the financial efficiency of this scenario. So we can play globally and locally, and this is very important during scenario analysis. Then we can move to sensitivity analysis, and here we can test our business idea. For example, if revenues will increase or expenses will increase or decrease. So for example, we can look at amount of trips. We can press equals and add a sensitivity coefficient to this input. So we can add sensitivity analysis coefficient to any input in our business model. So coefficient is added. Now we can press sense, and we will see how the increase or decrease of the amount of trips affects our financial efficiency. And now, for example, we can add this coefficient, we can detach this coefficient from amount of trips and add this coefficient, for example, to revenues, global revenues. Let's go back to sensitivity analysis tab, press the sense button. Or what we can do, we can detach this coefficient from the global dashboard. We can go, for example, to car number 4, just for example, and add this coefficient to the revenues, to its local revenues. And then press Send button. Or what we can do, for example, we can detach this coefficient from global revenues for car number 4, and we can go specifically to these types of trips, and we can add this coefficient to the trips starting from 15 to trip type number 30. We can freeze this cell. So we will be testing our business idea. What will happen if the revenues of the car number 4 trip type from 15 to 30 will increase or decrease with the step of 30%. So this is the increase of revenues of the car number 4, and this is the, if we take 70% of current revenues, 40% or 10% of car number 4. Now let's press Send. So in this case, we are able to test what will happen with our business idea if we have 5 cars, and inside car number 4 we have coefficients from trip type number 15 to trip type, for example, number 13. We're increasing and decreasing the revenue specifically for these types of trips for car number 4. So as you can see, we are very flexible with adding parameters to any inputs, revenues, expenses. So this will allow you to see your business idea in detail, to see how your business is flexible, how your business idea is stable if, for example, revenue decrease or expenses grow. This will allow you, this will give you a huge amount of information, and maybe you will have to rethink your business concept, and you will need to build some use scenarios. So usually entrepreneurs build a large amount of scenarios, playing with sensitivity analysis, with scenario analysis, and that's why I decided to show you all these models. So thank you guys for watching. I will give you the link, all the links in the description of this video. At the end screen of this video I will give you the link to the playlist where all these tutorials will be kept. Like, share, subscribe. You can order financial models from scratch for your unique business ideas. We can help you with that. So see you next videos. Thank you and bye.